Welcome back everyone, and now over the last 48 hours financial markets have been focusing on two major developments. First, significant changes in crypto market driven by institutional flows and regulatory developments, and now secondly, an important shift in the relationship between the United States and Iran, which has implications on oil, inflation, equities and crypto. Now let's start off with crypto itself. Now first things first, just looking at the price. Right now, Bitcoin and the broader crypto market have remained under pressure. You can see we have been coming for a push towards the upside, a nice bearish move slightly, but you can see we had a big move to that downside, and now we look to be kind of consolidating in this range. Now, the primary driver has been the continued risk of sentiment among these institutional investors. Over the last several days, Bitcoin has struggled to maintain momentum as capital continues leaving spot Bitcoin ETFs. Now, this has resulted in weaker price action across the market, with traders becoming increasingly cautious overall. So currently the biggest developments are the ETF flows. Over the past week itself, we've seen US spot Bitcoin ETFs experiencing billions of dollars in net outflows. Now this matters because ETFs have become one of the main gateways for institutional investors to gain Bitcoin exposure. When money enters the product, it tends to support price, and when money leaves, it creates the opposite effect, which we've exactly seen in the markets right now. As a result of that, traders are watching ETF flow data almost as closely as they're watching Bitcoin itself. Now, whilst price action has been very weak, one of the most important long-term developments is happening on the regulatory side. Attention is increasingly focused on the Clarity Act in the United States, which will be signed looking to about June, July time. So the goal of this legislation is to create a closer framework for digital assets and establish which regulator oversees different parts of the crypto industry. So for years, regulatory uncertainty has been one of the biggest barriers preventing a larger institution from entering the space. So if progress actually continues here, many investors view it as a very positive catalyst for the industry over the next several years. And now the biggest geopolitical development in these last 24 hours is obviously United States and Iran. So positive news is that both sides appear to be moving forward with negotiations rather than a renewed escalation. So over these last 3 or 4 days, we've definitely seen some very nice improvements happening. So reports currently suggest a potential extension of the current ceasefire agreement, giving both parties additional time to negotiate key issues. So this is, of course, very, very important because just weeks ago, the markets were pricing in significantly higher geopolitical risk, which we saw. We had headlines coming out of increased tensions every single day. And what we saw was increased headline upon headline of strikes, tensions, and more difficulties over this whole situation. Now, the real reason investors care so much about these negotiations in the Strait of Hormuz is because, if you don't already know, a significant portion of the world's oil supply actually travels through this region. So if shipping is disrupted, oil prices can rise very rapidly, like we've seen in these past few weeks. Higher oil prices can create inflation pressure, impact central bank policy, and reduce investor appetite for risk assets like crypto and growth stocks. So pretty much that creates a massive fear factor. Obviously, people aren't going to go into the market when they obviously see the tensions and think the situation is getting very bad. We may see increased prices of oil, and that obviously puts a bad situation on all your assets. Obviously, you'll be losing money, and that is why investors and traders aren't really putting too much into the market right now, and that's exactly why we're also seeing those ETF outflows. So that is why every headline involving the region has been moving the markets recently. So the news that comes out is very sensitive, and you can see the way it impacts the markets currently. Now, as we head into the next week, there are 3 developments that I am watching very, very closely, and I suggest you guys do the same thing. Now, number 1 will be, will Bitcoin ETF outflows begin to stabilize, and will we actually see a return back up to that 77K level? And our number 2 being that will we see negotiation between the US and Iran actually continue progressing? And then finally, will the Clarity Act continue gaining momentum, because long-term regulatory clarity could become one of the most bullish, important developments for the crypto industry. So overall, the last 40 hours have been a mixed picture. Short-term pressure remains on crypto due to ETF outflows and risk of sentiment, but geopolitical tensions seem to be easing and regulatory developments continue moving in a potentially positive direction. Now, currently looking at Bitcoin, like I said, we are consolidating within this range right now. We were coming slightly bullish, but you can see we are now consolidating between a price range of about 73 to 74k. The same thing is exactly for the same exact thing is for Ethereum as well. You can see we are making those lows in this range. You can see we have some confirmation here, there, and here as well. And it'll probably be the same for the upside as well. So currently that's just looking in the 5-minute time frame. So like I said, we see a big push to the upside, consolidation, and again, big push to the upside, consolidation. So we could see another push, let's say to about 2054 for Ethereum, and maybe back up to about 74.2k for Bitcoin. Now, looking at liquidity, we do seem to be in the upper range for most of the liquidity, and currently we have the most of it sat at 74.4k. Like I said, 74.2 to 74.4k is kind of where we are looking for. Now, we are looking at crypto total market cap, and I can see ever since the start of May, we've been seeing a push towards that downside. So it was at a high of 2.71 trillion. And now we actually have moved all the way down to a low of 2.41, which is a significant amount. So like I said, in the next week, those are the 3 things I'm kind of keeping my eyes on. And I will keep you guys updated. So hit that subscribe button so you don't miss out. Now, before you go, let me just talk to you about Evedex. Now, Evedex is a decentralized platform I've been using for many, many months now. Currently, I am sat in 1.2k profit on these 3 trades of Solana, Ethereum, and Bitcoin. Now, there are many things you can trade on Evedex. We've got crypto, we've got stocks, we have got Forex coming in the near future. So if you're into Forex, then stay tuned for that. We've got prize pools, chances to win many cool things like iPhones, AirPods, and watches. So if you're looking for a nice place to trade, then look no further than that description box down below. Now, as always, drop a like, it'll be greatly, greatly appreciated. Thank you all for watching, and I'll see you all in the next video.